Imagine waking up one morning and realizing the silver you've been quietly stacking, holding, or even ignoring has just been revalued by 2000%. Not a typo, not hype, a structural reset that changes the entire game. Today we're going to break down what a 2000% silver revaluation would actually mean, why it's even being discussed by serious analysts, and most importantly, what every silver stacker should do before, during, and after such a move. This isn't about panic, and it's definitely not about get-rich-quick fantasies. This is about preparation, positioning, and understanding how wealth shifts happen when monetary systems crack. First, let's clear something up. A silver revaluation doesn't mean silver magically becomes more useful overnight. Silver is already critical. It's used in electronics, solar panels, electric vehicles, medical equipment, defense technology, and more. Unlike gold, most silver is consumed. Once it's used in industrial processes, it's often gone forever. That alone makes silver fundamentally different from almost every other monetary asset on the planet. Now add the fact that silver has been historically suppressed in price for decades, traded heavily on paper markets rather than physical supply and demand, and you start to see why a major reset is even on the table. For thousands of years, silver was money. It wasn't speculative. It wasn't a commodity play. It was currency. Wages were paid in silver. Trade routes were built on silver. Empires rose and fell based on access to silver. Even in the United States, silver was part of the monetary system until the 20th century. What changed wasn't silver's usefulness. What changed was the system. Fiat currency replaced sound money, and with it came debt, leverage, and financial engineering on a scale never seen before. Silver didn't become less valuable. It was simply pushed aside. Now fast forward to today. Global debt is exploding. Governments are printing currency at historic levels. Confidence in fiat systems is weakening. Central banks are trapped. They can't raise rates too much without crashing the economy, and they can't print endlessly without destroying purchasing power. In moments like these, history shows us that systems reset. Sometimes quietly, sometimes violently. A silver revaluation would be one way to restore confidence without openly admitting failure. So what does a 2000% revaluation actually look like? If silver is trading around $25 an ounce and suddenly reprices to $500 an ounce, that's not a bubble. That's not speculation. That's a correction based on decades of distortion. It would instantly expose the difference between paper silver and physical silver. It would punish over-leveraged short positions. It would reward those who held the real thing. And it would fundamentally change how people view silver going forward. Here's where most people get it wrong. They think a revaluation means sell everything immediately and celebrate. That's the fastest way to lose long-term wealth. A true silver stacker doesn't just think in terms of price. They think in terms of purchasing power. What can silver buy before the reset versus after the reset? Land, businesses, energy, freedom. That's the mindset shift you need to make now, not later. Before any revaluation happens, the first thing every silver stacker should do is audit their holdings. Do you actually own physical silver, or do you own a promise? ETFs, unallocated accounts, and paper contracts all depend on counterparties. In a true reset scenario, counterparty risk becomes real very fast. Physical silver in your possession, or securely stored with clear legal ownership, is not the same as a digital claim. This distinction will matter more than price. The second thing to do is stop obsessing over daily price movements. If you believe a structural revaluation is possible, then short-term volatility is noise. Silver has a history of being boring until it's explosive. Long periods of consolidation followed by violent upside moves. The people who win are the ones who didn't get shaken out by boredom or manipulated price drops. Third, diversify within silver itself. Don't just stack one type. Coins, bars, fractional pieces all serve different purposes. Large bars are efficient for storing wealth. Smaller denominations are useful for flexibility and potential barter scenarios. Government-minted coins may carry premiums, but they also carry recognizability. A smart stack isn't about maximum ounces only. It's about usability. Now let's talk about mindset during a revaluation. If silver suddenly spikes, emotions will run wild. Media will call it a bubble. Governments may hint at regulations. New investors will rush in late. This is where discipline separates stackers from speculators. You don't have to sell everything at once. In fact, scaling out slowly into real assets often makes more sense than converting back into fiat that's losing value. A powerful strategy many experienced stackers think about is ratio trading. Not trading silver for cash, but trading silver for undervalued assets. Historically, silver to real estate ratios, silver to stock ratios, and silver to gold ratios swing dramatically during resets. When silver is overvalued relative to something tangible, that's when exchanging makes sense. Not because silver failed, but because it succeeded. After a revaluation, the world doesn't instantly stabilize. There's usually a period of chaos, confusion, and policy response. Windfall taxes, capital controls, or reporting requirements are not impossible. This is why privacy, legality, and planning matter. Work within the law, but understand it. Know your reporting obligations. Know how to protect what you've built without making emotional or reckless moves. One of the biggest mistakes new stackers make is waiting for confirmation. By the time a 2000% revaluation is obvious, it's already too late to prepare. Preparation happens in quiet times. When silver is boring, when no one cares, when the headlines are focused elsewhere. That's when smart positioning is built. Another key point most people ignore is that silver isn't just a hedge. It's a bridge from one system to another. Whether that next system is partially backed by commodities, restructured debt, or something entirely new, silver plays a role because it's trusted, scarce, and necessary. You don't need silver to replace fiat entirely for it to transform your financial position. You just need it to be repriced closer to reality. Let's also talk about patience. A revaluation doesn't always happen overnight. Sometimes it happens in stages. A sharp move, followed by consolidation, followed by another move. Those who expect a single straight line up often panic when the first pullback comes. Understanding market psychology is just as important as understanding supply and demand. For long-term stackers, the goal isn't just profit. It's sovereignty, the ability to opt out, even partially, from a broken system. Silver gives you that option. Not because it's flashy, but because it's real. It doesn't default. It doesn't go to zero. It doesn't depend on promises. If a 2000% silver revaluation happens, it will shock the world. But it won't shock those who understood the setup. The signs are already there. Rising industrial demand, declining above-ground supply, growing distrust in fiat currencies, and a generation rediscovering sound money. Whether the trigger is a financial crisis, a currency event, or a policy shift, the outcome favors preparation. So what should every silver stacker do right now? Stay informed without being obsessed. Stack consistently without chasing hype. Hold with conviction but remain flexible. Think in terms of purchasing power, not price targets. And most importantly, understand that silver isn't about fear. It's about foresight. If you're watching this and you're already stacking, you're ahead of the crowd. If you're new, understand this isn't financial advice, and it's not a call to panic. It's a call to think differently about money, value, and the future. Because when silver finally moves, it won't ask for permission, and it won't wait for consensus. This is the kind of shift that changes lives quietly, not loudly. Those who prepared won't brag. They'll simply move on to the next phase, using silver as a tool, not a trophy. And that's exactly how every silver stacker should think if a 2000% revaluation becomes reality. If you found this breakdown useful, make sure you stay connected, because what's coming next in the financial world won't look like the past. And silver may just be the bridge that carries prepared people across.